Hello and welcome to today's Morning Report on Tuesday the 21st of April with me, Rich Perry, Market Analyst at Tech Markets. European trading sessions got to a very good start actually, and that's come on a sort of a combination of things really. You had a very positive close on Wall Street yesterday, and then also overnight we had a rebound in Asian markets as well, and also early in the European session we've had a whole string of positive earnings results from likes of Sky, Publicis and SAP as well. And that's pushed certainly the DAX to the top of the board. 1.4% gains on the DAX. CAC 0.8. FTSE lagging slightly at 0.4%. DAX once again is also stronger as the euro is beginning to weaken, and that negative correlation between the two continues. Focusing on that specifically, the euro has been weaker today, but the dollar pretty much across the board has been strengthening. If you look at this dollar index, you'll certainly see this beginning to form support. It looks as though it's left a low again around 97 and coming higher once more. It's actually trading positively against pretty much all the forex majors today, with the major movers being on the euro and also the yen weakness again driving the Nikkei higher. And the only real exception to that rule is the Kiwi, which seems to have found a bit of support today. Across the majors as well, you've had a bit of action on the Aussie dollar. That is going to be my chart of the day, and that's coming with the also with the news overnight of the RBA minutes, the meeting minutes. Basically, the RBA are suggesting that a lower Aussie would help to support the economy, and also further easing measures may well be appropriate. So that should theoretically put a bit of an anchor on any gains on the Aussie. But I'll talk you through that chart in a little bit. Now, in terms of what we've got to look out for today, well, we've got the German ZEW economic sentiment at 10 o'clock UK time, and that has been a supportive indicator of recent times, certainly for the euro. But also that's a positive move there would also be good for the DAX as well. 55.3 is the expectation. So again, continued improvement in that ZEW. That would be 6 months in a row of improvement, which would be impressive anyway, because there is a direct correlation between the ZEW and future German growth, so that is a positive, and certainly that could well have an impact, maybe supporting the euro. But I would still see, I mean, I'll talk about the euro anyway in depth in a bit, but I would still see any rallies on the euro as a chance to sell, and certainly the action in the last couple of days would sort of back up my assertion on that front anyway. But my chart of the day, as I said, is the Aussie dollar. Now, we had this sharp reversal actually yesterday. We sort of had these few strong days of gains actually, and then we had this sharp reversal. It was only a couple of pips off being a bearish key one day reversal. Which would have been, I mean, it's a bearish candle anyway, being entirely outside the body of the previous day. So it's a very strongly bearish candle. However, it was only 2 pips away from being a bearish key one day reversal. But looking at these momentum indicators, you'd say that this is again all happening around about the levels at which the sellers have been coming through. You've had a stochastics crossing over. Every time that's happened in recent months, you've seen the pressure to renew to the downside. You've seen the RSI just beginning to roll over again. You've seen the MACD lines rolling over or beginning to roll over around that neutral point as well. Look at the length of time throughout this big downtrend. Although yes, you have broken the downtrend throughout the big sell-off. The MACD lines have consistently been below neutral, so that would suggest you're still trading in a negative outlook there on the daily chart. So the hourly chart, well, I've got highlighted here 74 figure. Go all the way back really, because it's a big long-term pivot level. 70. Crikey, if I could say it. 77.40 is this big pivot level on the Aussie. Numerous times it holds as a pivot level, and once again we're below it, so that would suggest we're in a sort of a more negative outlook within this sort of ranging phase. You've seen this rolling over. You could argue that there's a top pattern there. 77.55 down from 78, is it 78.40, so from 77.55, so it's about sort of 90 pips worth. So you could measure that to the downside, so that's 76.50, which is around about here. So it actually does give the expectation of potential further losses to the downside. So that's interesting in itself. There is a slight near-term pivot level at 76.80, which has been holding up today's correction actually, and just slight near turnaround. But I would say that any bounce on this is a chance to sell. I mean, you've just had the Aussie meeting minutes out today, which suggests that the RBA is likely to cut rates or ease policy at some degree in the coming months. So that should put pressure to the downside, and I think any rallies should be seen technically anyway as a chance to sell. And I'd certainly be looking out for this resistance band now in place between 77.30 up towards that neckline, you would argue, at 77.50 odd. So sort of 20, 30 pips worth of resistance there, and I'd be looking out at that as a chance to sell. Now looking at the momentum indicators, again we're in a more bearish configuration. Yes, we've just slightly turned up actually in the last hour, so maybe that would reflect this near-term improvement, but I would still say that you'd be looking out for rallies as a chance to sell on your Aussie, because I think that there is further downside, just on the longer-term basis and on also the intraday basis. I think there is further testing to the downside. So I wish you good luck in your trading on the Aussie, and I will speak to you later. Thank you.